Welcome to our third video on our series on the Entrepreneur's Accounting Toolbox. Today I really wanted to take some time and focus on our corporate tax filings. So what does this mean? How are we going to get it done? And how best to avoid some costly mistakes? So first and foremost, when it comes to corporate tax filing, what information do we need? And the most important in this is actually having a good balance sheet and an income statement for your company. That means that you need to make sure you're keeping good, accurate recording, doing some regular bookkeeping, which I've talked about many times, or doing things like using a software such as QuickBooks, where you can track all your data of what's coming in and out of your bank account or your credit card statements, and making sure at the end of the day you can spit out a report, which would be your balance sheet and your profit and loss statement. You can then use that information to then actually produce your tax return and do any adjustments relating to tax from a standpoint of the differences between accounting and tax filing. So as we continue on, the question is, what are some common mistakes that actually occur when you're doing your corporate tax filing? So the first one that I always say is garbage in is garbage out. And so what does that mean? Well, if you're giving me bad data, your tax returns are going to turn out poorly. So your bookkeeping is actually very essential in the process. If you have good regular record keeping, then that means your data that you're producing on that end will be able to help produce a very clean income tax return where you know you can back up and support all your numbers. The next one is really not knowing what you don't know. And so when people try to do their tax returns on their own or go to inexperienced individuals, they might not know what credits exist for them. And our Tax Act has gone from a very small book to a massive couple series book if you actually print it all out. And when you look at it, it's impossible to know all of it. But the people that can understand very important pieces relating to your business will allow you to help get additional credits and actually save on a lot of tax dollars as you go along. And the third one I really wanted to talk about was some tax traps that are very common that people might not be aware of. So a good example, if you're filing your GST and your tax return and both of them request CRA to provide you with sales data, if that sales data is different on both reports, you might end up getting an audit or a trust examination from CRA. So it's really important to understand what are the different tax traps that exist that you can be aware of to make sure that your data is being reported carefully and accurately to CRA to avoid any of those traps. The last thing I want to talk about on corporate tax filings is just some practical tips. So the first big thing is make sure you're always double checking everything, right? Even when it's being produced by an accountant or a third party individual, a lot of times the information might not be relayed properly. So it's important to double check it and make sure you're actually reviewing the work that they're doing, or even if you're doing it yourself, make sure you're reviewing your work to make sure that the information being provided to the government actually makes sense. Another good one is make sure you're e-filing these days. So CRA has actually imposed penalties for many businesses that don't e-file their tax returns. So it's important to use a good software that can produce your corporate tax returns and make sure that you actually have that ability to e-file to avoid some additional costly penalties. And the last one is make sure you keep consistent records. So year over year, your data has to be transferred and your business is a continuum. It's not just on an individual year by year basis. So you want to make sure you're keeping good, consistent records year after year, and because you never know when CRA is going to come back. They could come back after a couple years or even ask for data that's even longer than that. Once again, this is Irfan Ali Muladina with RMI LLP, and thank you for watching.